It's 1:30 p.m. and you're watching Channels Television. It's time for update from the world of business. Welcome to Business Incorporated. Here's what we have for you today. Good news as Nigeria's bond gains after the NNPCL gets $3 billion crude loan from Afreximbank. And the rand steadies ahead of BRICS summit, which begins on Tuesday. Rwanda's central bank hikes rates to 7.5%. Good afternoon. Welcome to Business Incorporated. I'm Ini John Mekwa. Well, let's start off with what's going on in the market at intraday. We begin with Africa. Nigeria, we see a positive there, 0.05% after how many days? 4 days of bearish sentiment. Well, we hope that this will end positive at the close of trade. Let's look at the numbers right there. South Africa is in the red, 1.38% at 73,346.31. Now look at other parts of Africa. Look at Egypt, for instance, and see that Egypt is in the red, 0.52%. Kenya closed yesterday very much in the green, 2.19%. Before we go to the Middle East, now let's do intraday analysis with Mr. David Adonri, the Vice Chairman, High Cap Securities Limited. Mr. Adonri, good afternoon. Well, this is, yesterday we had intraday positive, but the market closed in the red. Now we have another intraday. What do you see at the close of trade today?
Thank you very much. Good afternoon to all of you at the studio there together with the viewers. Well, we have a market that is in a state of dynamic equilibrium, in which case there might be a slight loss in a day, and the following day there is recovery. So the market is generally driven by the forces of supply and demand. So intraday trading is the trade that occurs at the exchange, that is NGX, within the day. And such trades eventually determine the direction of the market. So let us keep our fingers crossed and look at how the market ends. But I think we're still looking at how the market will react to the 3 billion naira loan from Afreximbank secured by the NNPC to stabilize the price of petroleum products. So, but however, a lot of analysts are saying that such a move is akin to reintroduction of subsidy through the back door. And of course, you know, the recent momentum the market has gathered is being driven by reforms, policy reforms that are geared towards deregulating the market and making the economy to be market-driven. So a lot of people are hoping that this is not a reversal of reform. So let us see how the market will react to the situation. But so far, I think there is stability in the equities market
There's also this reclassification of Boa Foods PLC. What are some of the implications and what do we expect it to do, especially to the consumer goods counter?
Okay, generally the reclassification indicates that Boa Foods is no longer a mid-cap security, is now a high-cap stock. And so it has to now operate at the same sphere, which is PS at that iconic level. It's now a major stock in the market, and accordingly, the trading rules as it affects trading in that stock would also be in consonance with his new status as a high cap stock. So you have already heard that the tick price for price movement of Boa Foods has now moved from 5 kobo for every deal to 10 kobo. That is because 5 kobo would have the too immaterial to be recognized by the trading engine in the course of having transactions on the security. hence the movement to 10 naira, which is the minimum point that the market will recognize such transactions. So congratulations to Boa Foods. We hope now that it is playing in the big league, it will be able to sustain his new status with time. I think.
Looks like we lost Mr. Adonri there, just about to conclude his thought, but
It is not in doubt that.
Oh.
Yeah,
all right.
The economy is moving towards the direction of food security.
Okay.
And so everything is being done to make sure that those in the food and agri sector are giving the kind of support that they require to guarantee Nigeria's food security.
Thank you so much, Mr. David Adonri, Vice Chairman, HiCap Securities Limited, for your time.
Always a great pleasure being with you. Thank you, and bye.
Bye-bye. All right, let's go to the Middle East now and see that it's a mixed sentiment. Abu Dhabi is positive 0.15% at intraday. Dubai is on the flip side, marginally down 0.04%. And we know that other markets are closed. Saudi Arabia closed positive 0.51%. Qatar also flipped 0.86% for that. Now let's go outside the market for a bit and head to Berlin, where we have noticed that in large parts of the world, the cost of living is high. It's high in Nigeria, it's high in the UK, it's high in the United States, and seems to be getting worse. And in some parts, while in some parts we see a reprieve, like in the UK. Well, a new survey says that real estate prices will rise drastically over the next decades. Lars Halter joins us to give us more about this report and more. Hi, Lars. Good afternoon. So tell us more about that report.
Yeah, thanks for having me. Well, first of all, I'd like to point out that it's truly a global study. It was conducted by a German and a Swiss institute, but they polled over 1,400 experts in 133 countries around the world, really touching on all regions. As you would expect, price trends are really different in various parts of the world. The strongest gainers when it comes to real estate prices are expected to be Southern Asia and East Africa, with annual gains of around 20%. Northern Africa, South America, Eastern Europe and Central Asia are expected to see gains between 10 and 15% per year. And a little weaker, with only moderate gains of 6 to 8%, are North America and Western Europe. And then even a bit weaker yet would be the central part of Africa, with expected growth of around 5%.
So do we have factors driving this rise?
Well, one thing is clear to see when looking at the list here. The richer parts of the world, like North America and Western Europe, have already gone so high there just seems to be very limited potential for growth. As for the emerging markets, they're likely to see more growth as they see economic growth in general, higher incomes, a generally higher living standard, and changing preferences when it comes to living conditions. As people are coming out of poverty and become part of the middle class, they're looking for bigger apartments, for houses, bigger building lots maybe, and that will drive up prices, and especially so in areas where the supply of livable space is limited. The same is true the other way around, of course. During tougher economic times, people will cut back, including when it comes to living conditions, and experts expect that some parts of Europe, for example, will see economic weakness possibly for years, and the real estate markets will certainly reflect that.
Yeah, so what are the implications of this for people around the world, for the markets?
Yeah, that's an interesting question. Experts see rising real estate prices as a great chance to invest, of course. But while investors can likely get a good return on investment, that does not necessarily help regular folks, many of whom are not going to be homeowners, of course, but tenants. And they might have to deal with rising rents too. So the real estate boom that's expected over the next decade could benefit investors, many of them likely being publicly traded builders and real estate giants. But there will also be a great need for communities to step in and build for affordable or subsidized living. Otherwise, what sounds like an opportunity and a sign for economic growth and rising wealth in general could be a disaster for regular people.
Yeah, well, I hope to be one of the investors. Lars, thank you so much. Okay, so let's go to other markets now. Asia Pacific now, we see a notable decline on Friday as investors grappled with the repercussions of Japan's latest inflation figures and the persistent, we see challenges faced by China's real estate industry. Remember, we just talked about real estate amidst the economic backdrop. Japan's core inflation rate fell to 3.1%. That's down from the previous month, 3.3%, while the headline inflation managed to maintain its stance at 3.3%. The repercussions were felt across the region, with Hong Kong. All right, let's look at those numbers right there. The Shanghai Composite is negative at 1%. And for Australia, it's slightly up 0.03%. We can have the Nikkei. Yeah, there you have it. Nikkei is in red, 0.225 at 31,450.776. The Kospi is also in the red. The real estate, and that's threats, inflation number and threats to China's growth is really affecting the region. Hang Seng is deeply in the red at 1.76% at the close of trade in Asia. United States now stock futures changed a little on Thursday night after the major averages dropped for a third straight day. The Dow Jones Industrial Average futures displayed a modest rise of 0.09% increase, while the S&P 500 futures hovered slightly above the flat line. Nasdaq 100 futures experienced a marginal dip. Maria Bird has more details about Thursday's trade.
The U.S. stock market closed sharply lower on Thursday, as the Dow Jones, S&P 500, and Nasdaq had many challenges on Thursday. Stocks like the healthcare industry seemed to take quite a dip. Companies like CVS losing its providers, with Blue Cross of California, which caused its stocks to take a hard dip. This is also major concerns for investors as they're watching to see how the market is responding to several changes. Investors have seen that the Dow Jones closing at 0.8% down, the S&P 500 closing at 0.77% down, and then the heavy tech Nasdaq closing at 1.17% down. This could be concerns as we look to see what the federal policymakers will do. Wednesday's meeting did not see much hope for many investors, as it is presumed that potentially in the month of September there could be more interest rate hikes, as the Federal Reserve tries to continue to rein in inflation, which could be on the rise in the weeks and months ahead.
Thank you so much, Maria. Let's head to the global oil space now. After an impressive 7-week run of gains, oil prices are facing an imminent downturn, mirroring mounting apprehensions over China's waning demand growth due to its slowing economy, coupled with the potential of extended higher U.S. interest rates. Major benchmarks, once soaring, have now evened out, with U.S. West Texas Intermediate crude edging up a mere 0.1% to reach $80.49 a barrel, while Brent crude remains stagnant at $84.12 a barrel. Investor concern looms over the potential impact of heightened borrowing costs on economic growth, potentially leading to reduced overall demand, including the demand for oil. Amplifying the unease, China, which is the globe's second largest oil consumer, has been grappling with a marked economic slowdown since the second quarter. China's economic fluctuations have whipsawed global financial markets in the past few months. However, amid the prevailing uncertainty, a silver lining emerged as China bucked tight the tread and tapped into the crude oil inventories in July, a move not witnessed in over 33 months. On the U.S. front, data released this week has indicated a decline in crude oil inventories by nearly 6 million barrels, and that's driven by robust exports and elevated refining run rates. Furthermore, weekly products supplied a proxy for oil demand reached heights not witnessed since December. And from there, we head to the metals market, where decline on concerns that the Federal Reserve will sustain elevated interest rates over an extended period has affected the price. Spot gold managed a 0.2% gain, reaching $1,892.02 per ounce, rebounding from its mid-March lows. Its U.S. counterpart, gold futures, recorded a 0.4% rise to $1,921.90. Analysts suggest that the pullback in the U.S. dollar has paved the way for gold to make a modest move higher. Bargain hunting might be at play as the precious metal trades at these levels, offering an appealing opportunity for some investors. The retreat of benchmark 10-year U.S. Treasury yields from October's peak and a 0.3% dip in the dollar index have collectively contributed to making gold a non-yielding asset more affordable for overseas buyers. Spot silver experienced a 0.6% surge, reaching $22.82 an ounce. Meanwhile, platinum and palladium both exhibited fractional gains of 0.8% and 1% respectively, yet they remained on course for weekly declines. Let's take a break now. When we come back on Business Incorporated, what's going on in South Africa next week? It's the BRICS Summit. We'll tell you more about that. Welcome back to watching Business Incorporated here on Channels Television. We'll start off in South Africa, where the rand steadied as South Africa's currency tracks developments affecting its biggest export partner, China, which is ramping up support for the yuan. The rand fluctuated between gains and losses and was a little change at 19.07 per dollar earlier today in Johannesburg. China's onshore yuan was also largely steady at 7.28. On Tuesday, the development bank, founded by the BRICS Summit, which is about to start on Tuesday, closed the auction for its first South African rand bonds as it comes under pressure to boost its local currency fundraising and lending. The new development bank, two bonds at 1 billion rand, that's about $52 million, 5-year note, and a 500 million rand 3-year note attracted 2.67 billion rand of bids in total, according to auction results shared by two investors. South Africa's finance minister said that the NDB, which was founded to give the BRICS member, that's Brazil, Russia, India, China, and South Africa, more control of development financing, was not doing enough local currency lending. And BRICS leaders will meet in South Africa from Tuesday to discuss how to turn a loose club of nations accounting for a quarter of the global economy into a geopolitical force that can challenge the West's dominance in world affairs. Russian President Vladimir Putin, who faces an international arrest warrant over alleged war crimes in Ukraine, will not be joining the leaders from Brazil, India, China, and South Africa amid rifts over whether to expand the bloc to include dozens of global South nations queuing up to join. However, South Africa will host Chinese President Xi Jinping, Brazil's Luiz Inácio, and Indian Prime Minister for the BRICS Summit, which is from 22nd to 24th. Well, for few details have emerged about what they will plan to discuss, but expansion is expected to be high on the agenda as some 40 nations have shown interest in joining either formally or informally, according to South Africa. Well, they include Saudi Arabia, Argentina, Egypt, and China is seeking to expand its geopolitical influence as it tussles with the United States and wants to enlarge BRICS quickly. Well, let's talk more on this with Matt Kindiga, our Friday guest, the practice leader, Sub-Saharan Africa with Front of You. Thank you so much for your time again this Friday, Matt. Can you hear me, Matt?
Yes, can you hear me?
Yes, I can hear you now. So,
fantastic.
So what does this meeting really mean for Africa? I mean, not other continents. We see only South Africa is a member now, but we see a country like Egypt indicating interest to join. So what does it mean holding these BRICS in South Africa for that matter?
Well, there are a few things to think about. I mean, the BRICS conference comes at a very interesting time for the region because at the moment there's quite a lot of competition between, say, the US, China, Russia for influence in the region. And this takes two forms. One is sort of geopolitical interest or competition, and the other is economic. So we're seeing a lot of interest or a lot of enthusiasm by the likes of Russia to increase its influence in the region. It wants to sort of shore up support globally and become a bit of a bulwark against the West in Africa. But at the same time, both the West and Russia, China, are competing for resources in Africa, especially gas and metals. So it is a very interesting time that this is taking place. In terms of whether or not we would expect to see more nations join BRICS, at the moment, the fact that Russia has become a bit of an international pariah and does play a big role in the BRICS grouping does mean that a lot of countries may think twice about trying to join the BRICS organization and perhaps distancing themselves a little bit from the West and the US. So at the moment, it's a bit uncertain if an expansion of the BRICS region is inevitable.
Yeah, because I was also thinking the sentiment that will come around South Africa. Remember the first time they talked about Mr. Putin going to South Africa for these BRICS, it affected their economy, their rand dropped and all of that. So I'm thinking of the West sentiment towards South Africa being the host.
Yeah, so South Africa is walking a bit of a tightrope at the moment. It really is very conscious of the fact that it needs to retain and continue to attract Western investment. It has a very open economy. It's very closely economically integrated with Europe and the US. It relies quite heavily on tourist revenues, for example, from those countries and financial flows. South Africa, it really does depend on what announcements are made regarding South Africa's relationship with especially Russia over the next, during the BRICS summit. So, for example, if we do see some very firm commitments from the South African government to tighten or sort of deepen relations, especially militarily, with Russia, then you could see investor sentiment, especially from the West, deteriorate towards South Africa at the moment. Our view is that South Africa is unlikely to commit to anything openly just yet, because it doesn't want to scare off too many Western investors. But yes, all eyes will be on any announcements that will be made. But really, when we look at investor sentiment towards South Africa, the things that are actually a bit more important at the moment are things like sentiment ahead of the election in May 2024, and also what's happening with the economy domestically, especially around power shortages. Those are two things that investors will be also very worried about.
Yeah, I noticed how you said openly there, you emphasized that. But do you see them feasting on this de-dollarization of the world attempt? Do you see them feasting on that?
So I think there will be announcements and plans to sort of make moves towards de-dollarizing or sort of creating an alternative to the dollar. But in our view, the de-dollarization of the world is probably a bit overhyped at the moment. I think there are likely to be sort of bilateral agreements between particular countries. For example, trades in commodities could be settled in renminbi or different currencies. But at the moment, in order for there to be a viable competitor to the dollar, for example, the Chinese currency as a global reserve currency, you would need to see, for example, India get on board with this program. And at the moment, it's unlikely that India and China will agree on such a thing at the moment. We also do see with the war in Ukraine at the moment and Russia very involved in the BRICS grouping at the moment, lots of countries will be very wary of committing to a new currency or a new sort of or the de-dollarization of trade, given that Russia is currently subject to sanctions and does have influence over the BRICS organization. So, yes, we are likely to see more sort of non-dollar transactions globally, but actually the de-dollarization of the world is probably a bit overhyped at the moment.
All right. Well, a lot of interesting things to look forward to next week at that BRICS summit, Matt, and I know you will follow up. But thank you so much for your time and have a great weekend.
Thanks, you too.
All right, talking about dollar, the price of Nigerian government dollar bonds jumped after the country's state-owned energy company, NNPCL, obtained a $3 billion loan that will help boost the supply of hard currency on the local foreign exchange market. The sovereign dollars bonds due in 2047 gained 1.5 cents on Thursday to 69.31 cents on the dollar, the biggest daily increase since July, driving down the yield to 11.36%. Nigeria's international bonds due 2033 and 2051 also advanced. Remember that NNPCL and Afreximbank jointly signed a commitment letter and term sheet for an emergency $3 billion crude oil repayment loan, which is targeted at supporting the federal government in its ongoing fiscal and monetary policy reforms aimed at stabilizing the rate of the naira. To Rwanda now, where that country's central bank says it has increased by 50 percentage points its lending rate to 7.5% to strengthen its fight against the current inflationary pressures, among other things. Central bank governor announced the decision on Thursday during the release of the quarterly Monetary Policy Committee and Financial Stability Statement, a review of recent global and national economic development, as well as potential interventions. That's it on Business Incorporated. Closes it for the week. Thank you so much for being a part of it. The journey begins again on Monday. Do join me then. But remember, tomorrow, Saturday, 7 p.m., Will LeBon will be here. Capital Market. Capture all that happened in the market this week. You have the details with Will LeBon tomorrow. I'm Ini Jamekwa. Have a great weekend.